Hi, real estate broker Josh Barker, and thank you for checking out our market update for the month of March 2026. I've heard a lot of things over the last couple of days related to some of the U.S. involvement overseas, and some of the concerns are obviously how would that affect the economy here in the United States, and related to real estate, how would that affect things? The good news is that it doesn't appear that it's going to turn into a larger regional conflict. And as a result of that, we think that likely the news cycles, if you will, over the next week or two will start to settle down, and hopefully with the disruption in the fuel that's being moved back and forth, hopefully it doesn't last for too long. We might be able to see things settling back down again. So in the short term, we expect to see some disruption, obviously, but in the broader stroke over the next month or so, we think things will actually normalize, and then we'll move on from there. Next thing to look at is just total homes that are sold last month. We finished at 154, and that's up just slightly over last year, where it was about 145. And if you'd watched any of our previous market updates, I'd said that first half of this year, we're expecting it to kind of resonate with last year. And then likely by summer, we could start to see some sales volumes increasing if, of course, interest rates continue to go down. Next thing to look at is just total pendings. Pendings finished at 213. That was up slightly, about 12% over last year. It tells us that March and April are likely to be pretty influential months in the market. We do expect sales volumes to increase over last month and the month prior. Looking at inventory right now, we're sitting at 724. Now this is interesting. We're only, maybe 30, 40 homes for sale more than we were last year at this time. So our inventories are still pretty lean. More so than we really want to see. And it's showing up in a couple different places. One is in our absorption rate. Right now, we're averaging about a 3.6 month supply of homes for sale. It means we're at the tail end of a seller's market, if you will. And right now, we're hoping to see more inventory coming to market in the coming months, but we'll have to wait to see with the economy and things like that, if we're going to see that inventory we're expecting. If not, if interest rates go down and buyer demand jumps up, we could expect to see pricing moving up too. So again, something that we'll have to watch for. Next thing to look at is just days on market. Days on market's also extending a little bit. Right now, the average home is taking about 2 weeks longer to sell than it did last year. So right now we're averaging about 104 days from when a home is listed for sale to the point in when it actually closes escrow. Followed up by the real estate heartbeat right now is really the price point between $300,000 and $500,000. It tends to be where the market has the greatest amount of volume right now. And of course, that means that if you're participating in the housing market right now, if you're priced below $500,000, you're probably gonna feel a lot of interest and activity in your home. Homes that are priced above that, market times tends to extend a little bit longer. Showings begin to back off a little bit. And so marketing and promotion and some of the tactics you use should probably adjust as well. Follow up by the foreclosure activity. Right now, I looked this morning before this video, it reported there was 154 properties that are in some stage of foreclosure. That would relate to homes that have a notice of default, properties that have a notice of trustee sale, or they're already bank owned. In the entire county, that encompasses 154. Now, traditionally, we only see about a third of those homes ever reach the market. And with a sell-through rate of about 6 months, you're probably looking at maybe 8 or 9 listings added to the housing inventory each month that are related to distressed properties. So again, not really a huge number to be concerned with. And of course, we feel for those who are losing their homes in that situation. Following up with the city of Redding, we finally got our really finalized numbers. They weren't too far off from where we were last year, what we expected, but we finished at 174 permits that were pulled in the city of Redding last year for new construction for single family homes. Now, I will share this with you. In 2026, we're actually projecting now that the new permits pulled is going to go down. And a large reason for that is that we're expecting that D.R. Horton, one of our local home builders, they're beginning to tail off some of their activity at the moment. If that continues, that means that they will no longer be participating in the market in the second half of this year. And that also means that Palomar Builders will likely resume that position of the #1 sales home builder here locally in the North State. But we do expect that sell-through rate to drop a little bit of new construction. Permits will likely come down a little bit this year. So we're going to be watching that closely, but that's right now what we're seeing as likely what the outcome could be. So looking ahead, we really do think that the market looks really strong. Interest rates last week, they dropped just below 6% just for a couple of days. We're already back over 6% today. But we do think that this trend is going to continue as we go into later months this year. So really keep an eye on interest rates if you want to know where the market's going, because as those rates go down, buyer participation is going to go up, and that's likely to push pricing up a little bit. So in any case, if you have any other questions, just know we're always here to help. Thank you for taking your precious time with us today. Have a great day.